Well, it seems the only certainty on Wall Street these days, at least, is the uncertainty. So what's an individual investor to do? If you want to get in the market, which stocks do you pick? If you're holding stock, when do you sell? My guest today has some advice for you, Marc Chaikin, an expert known on Wall Street for developing computerized stock selection models for professional money managers. He's also the founder of the Chaikin Power Tools iPhone app. We thank you so much for being here today.
Eric, thank you for having me.
All right, so wow, where to begin? Because a lot of people are anxious, and rightfully so, when it comes to where they put their money, what do they do, when do they buy, when do they sell, especially the novice or the neophyte investor. They're just getting into it. It's overwhelming. What do you say to people?
I say you have to have a plan. So it starts with a plan, and you have to stay on the plan, and particularly don't get affected by the headlines and the scare commentators, because that's going to be a complete distraction and blow your bottom line by the end of the year.
Now, you developed all of these tools over the years to help these professional money managers. A lot of what you've developed is being used today. Talk about what led you down that path, and how you can take that and adapt it, or how you have taken that and have adapted it for the individual investor.
In 2009, I saw a huge amount of money being shifted from brokerage accounts at full-service brokers like Merrill Lynch and Smith Barney to self-directed accounts at online brokers like Charles Schwab, Vanguard, and Fidelity. And based on 40 years in Wall Street, I realized that these individual investors, these self-directed investors, didn't really have the tools and the discipline to successfully manage their own money. They were angry with Wall Street. They were disappointed with their performance after the crash of 2008. So I started Chaikin Stock Research and built the Chaikin Power Tools app to provide professional quality tools for the individual investor and empower them to take charge of their financial future.
Now, when you talk about the tools, if I'm sitting down and I want to start looking into a company perhaps, or a particular stock or a fund, there are so many different aspects that you need to look into. There's all the different charts, the fundamentals of the company, earnings. What do you tell people? Where should they start?
Well, I started in the business as a technical analyst, recognizing that fundamentals, earnings, analyst estimate revisions really drive stock prices, but that technical analysis could monitor all that. What we've done with Chaikin Power Tools is build a 20-factor model and display it in a very simple red-green gauge.
We actually have some shots of the app right now, if we could throw that up.
Oh, that's great. And it helps the investor filter investment ideas.
So what is this?
We're looking at the Chaikin Power Gauge on Green Mountain Coffee, which is very bearish. The stock had a big run-up to around 100 based on a lot of hype and some decent earnings quarters, but then they stumbled. And because the stock had a very rich valuation, and our model looks at that, it looks at factors that Warren Buffett would look at, and it looks at factors that Jim Cramer would look at, which are totally different.
And here's another one. This one is Starbucks, actually, and now especially related to Green Mountain, because Green Mountain not too long ago started selling the Starbucks K-Cups.
Exactly. Now, Starbucks had a bullish rating in our model, starting in the low 20s all the way up to 40. It's now got a neutral rating. So you've really zeroed in on something very important for investors. Even within the same industry group, the coffee retailing sector, there are stocks that have bullish potential and stocks that have bearish potential.
And this one looks to be Macy's.
This is Macy's. Our model has been bullish on Macy's since the low 20s. You could contrast that with Urban Outfitters, which is a Philadelphia company that's done very poorly in the last 9 months, which has had a bearish power gauge rating. It's very important for investors to have an objective way to analyze all this data, but you zeroed in on something very interesting, Eric. There's too much data. There's information overload. So I could spend 3 days teaching an investor what to look at and how to analyze all this, and it's available on Yahoo Finance and an Investor's Business Daily. The Chaikin Power Gauge distills all this down to that red-green display. It's been independently back-tested, and investors need a tool like this. It's not the only tool, but it's a very effective tool at deciding where to put your money.
So how does the app actually work then? There's a company perhaps that you're interested in, you input what that company's stock symbol is, and then what?
And then you see the power gauge rating, and the power gauge rating actually enables you to drill down and see which factors are influencing the model.
So it'll actually explain to you, more or less, why it is that this particular company is doing well right now, or would be a good investment.
Exactly, and going back to a question you asked just earlier, 3 most important things about stocks. Are they moving up or down? You want stocks that are moving up. Are they richly valued like a Netflix or a Green Mountain Coffee, or are they fairly valued like a Starbucks or a Macy's? And what are the analysts doing? When analysts raise their estimates, stocks go up. When analysts lower their estimates, stocks go down. Those are 3 of the 20 factors in the Chaikin Power Gauge model, and if you ask me to zero in on 3 to look at, those would be the 3.
You just mentioned Netflix. That's been a biggie lately, where we've seen a huge fall from grace with them. What do you expect to see with Netflix?
Well, here's the example of where technical analysis would have kept you in Netflix on the way to 300. Our model was neutral, but under the surface it was bearish, but we recognized that it was going up. Actually, Netflix now in our model is neutral, turned bearish at 260 on the way down below 70. If they regroup and get their subscriber base loving them again, maybe the company does well, but that's the key. Maybe in investing doesn't work. You really need to put the odds on your side by not taking guesses, not buying fallen angels, but sticking with stocks which are proving themselves in the marketplace every day by performing well, even when the market is not.
But the point is, and we do want to stress this, is that, of course, in the markets, there's just no guarantee one way or the other.
Of course. Costco is an example of that. Our model has been bullish on Costco. This morning they reported disappointing earnings. The stock is down 3 or 4%. We've told people to take profits, but it speaks to your point. Nothing is certain. Even though our model was bullish and the stock had just made a new high, they came in with a disappointing quarter. This can happen.
All right, we're going to have to leave it right there. Thank you so much for being on the show. It was great to meet you.
Eric, thank you.
All right, thanks for your time. And if you have any questions or comments about anything in today's interview, send them to me at itsyourmoney@news12.com. We'll be right back right after this.